we are now supposed to learn about the golden rules. Now, why they are called as golden rules? Because they have been used since ages to prepare the financial statements, or rather to record the accounts in the books of accounts. So now for each category of account, that is personal, real and nominal, we need to apply these golden rules to each of the category. And let us now just look at the golden rules. So the first thing that you should know is golden rule for all the three accounts, that is personal, real and nominal. So here we begin with golden rules. Alright, so first golden rule applies to personal account. First golden rule applies to personal account. And the rule is very simple. Debit the receiver and credit the giver. Debit the receiver and credit the giver. So this is the first golden rule which we apply to personal account. Now in this situation, it is very simple. Now let us say, suppose if I am the business, because we write accounts only for business organization. So from business organization point of view, if any personal account category is the receiver, then you have to debit it, and if any personal account category person is the giver, then you have to credit it. Now mind you students, debit and credit does not indicate something positive or something negative, it just indicates two words. So say for example, there is a business organization X Limited. In this business organization, X Limited is making payment to Mr. A. In this business organization, X Limited is making the payment to Mr. A. So what will happen is, X Limited, while recording this in the books of accounts, will give a debit effect to Mr. A. So as the rule says, debit the receiver. From the point of view of X Limited, A is the receiver, so debit the receiver. Alright, so what we will do is, in the books of X Limited, the account of Mr. A will be debited. Alright, and likewise, suppose if Mr. A is making any payment to X Limited, so in this case, Mr. A is the giver, so we will credit Mr. A. So what we will do is, we will credit Mr. A. The basic rule of personal accounting is very simple. If a personal account, whether it is a natural person, whether it is a bank, whether it is any artificial person, organization, anybody, if we give them something, they will be the receiver, so we need to debit their account. And if they give us something, they are the giver, so we need to credit their account. So this is the basic golden rule of personal account. Now let us check out the golden rule for real account. Second type of account is real account. And there is a very simple golden rule for real account. It is nothing but debit what comes in. Debit what comes in. Alright, and credit what goes out. Debit what comes in, credit what goes out. So this is the golden rule which we apply whenever we are dealing with any real account. Now say for example, to make you understand this rule, let us say our organization X Limited. Our organization X Limited is purchasing a furniture. Right? Furniture is purchased. So from the point of view of X Limited, whenever the furniture is purchased, the furniture will come into the business. The furniture will come into the business. So what we are supposed to do is, we are supposed to debit the furniture, because debit what comes in. Right? So the furniture is purchased, furniture comes in debit. Let us say X Limited also purchase a car. So car is purchased, car is coming into the business, and we will give a debit effect. So again, car purchase, we will be debiting car account. So likewise, whenever anything comes into the business, we are supposed to debit that particular account. Now the question is, furniture or car, we are also supposed to make a payment. So if suppose I make the cash payment, alright, so if I am making a cash payment, cash is a real account. Cash will move out of the business. From X point of view, furniture comes in and cash moves out. So cash moves out. So what am I supposed to do with cash? I am supposed to give a credit effect. I am supposed to give a credit effect for the cash. So the very simple rule of real account is debit what comes in, credit what goes out. So whatever comes into the business, any non-living thing coming into the business, you need to debit it. Any non-living thing moving out of the business, you need to credit it. So the rule is very simple and basic. If anything comes into the business, debit. If anything goes out of the business, credit. Alright, and likewise we come to next category of account, that is nominal account. So the third type of account, nominal account. Alright, so third type of account we are dealing with is nominal account. And what rule do we apply in nominal account? It will be very simple. The rule will be debit all expenses, debit all expenses. ये चलने में थोड़ा प्रॉब्लम आने लगा. Debit all expenses and losses, and credit all incomes and gains. So as I told you earlier, debit does not indicate anything positive, credit does not indicate any negative. In case of nominal account, whenever we are dealing with any nominal account, we need to apply a simple golden rule. If there is any expense for the business, if there is any loss for the business, we need to debit that particular expense or that particular loss. And if there is any income or if there is any gain for the business, we need to credit that particular income or gain into the business. So let us just take simple examples for this. In case of X Limited, our business organization, in case of X Limited, our business organization, X Limited is making several payments. Let us say X Limited has made payment of salary, so it is an expense. Let us say electricity bill, it is an expense. And let us say there is also a loss by fire in this particular accounting year. So in this particular example, I have taken example of expenses as well as losses. So as you can see over here, salary is an expense, I will be debiting it. Alright, or rather I will show it below here. So in this category, salary, electricity bill and loss by fire. Salary and electricity are examples of expenses. Loss by fire is an example of loss. In this particular event, I will be debiting all the three. So which means I will be debiting salary account as well as I will be debiting electricity bill account as well as I will be debiting loss by fire account. So in this particular event, all the three, salary is an expense, electricity bill is an expense and loss by fire is a loss. And as the rule says, debit all expenses and losses, what I am supposed to do is I am supposed to give debit to each of the account. Likewise, if from X Limited point of view, let us take another three examples. Alright, let us say there is rent received by X Limited. This indicates an income. there is interest received by X Limited. This also indicates an income. And let us say there is profit on sale of car. Let us say the car is disposed and there is a profit. So in all these three events, the first two are examples of an income. Rent received, interest received is an income, so it will be credited. And in this third example, it is a profit, which is a gain. So in all these three categories, what we are supposed to do is, we are supposed to give a credit. We are supposed to give a credit, because as the rule of nominal account says, it is very, very simple. Debit all expenses and losses, credit all incomes and gains. So whenever in the business organization there is any expense or loss, we need to debit that particular accounts. And whenever there is any incomes or gains, we need to credit that particular accounts. So these were about golden rules. Once you are thorough with the golden rules, trust me, everything falls in place and everything will be very easy for you.